Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for February the 24th, 2011. Now today we've had a mixed bag. Our crude oil trade is getting hit pretty hard, but our US Canada long did very well. Now looking at things today, I'm moving away from the US CAD and I'm going over into another commodity currency, into the New Zealand US pair. Now New Zealand's still under some pressure with the earthquake and everything. There's still some opportunity there, and we are still seeing some dollar strength on this pair as we are in the US Canadian pair. So let's identify the three critical levels of resistance in this particular case: 75.02, 75.60, and 76.07. Now with this, we know we want all of our stops above the 76.07 area, and we want to look to sell into strength on this particular pair. Now our predicted MACD, our predicted true strength indicator, everything there is in line with this trade. Our predicted short, medium, and long-term differences are all well into the negative, but they're not oversold yet. So the other thing we want to look at here, of course, is our three main crossovers. So we're going to start with our short-term crossover. We can see that we've still got a crossover to the downside. We're then going to look at the medium-term crossover. Everything looks good there, and our long-term crossover, everything is good there too. So now what I'm also going to do here is I'm going to put in the high-low range for the day. So we can see the last couple of days that we're actually breaking down to the on yesterday we actually broke well below the vantage point predicted low, and then today we're sitting right down at the bottom, and you can see that this particular candlestick here did not get up and touch the predicted high of the day. Another very bearish indicator for the New Zealand US pair. Now the New Zealand US dollar is getting beat up, or the Aussie New Zealand is really moving higher. This is again putting pressure on the downward pressure on the New Zealand US dollar. So all of this is helping the trade. So we've identified the key levels. We know where our 3, our 8, and our 18-day predicted moving averages are, which are currently acting as resistance. Now what we want to do is fine-tune this entry point a little bit. We've got 75.17, neural index is down, 73.93 is a low. So on a retracement towards the 75.17 area, we're going to be looking to set our short positions, and then we would look for about 110 pip move for tomorrow, which is a very nice trade depending on what size of the contract, etc. But again, we want our stops over that 76.08 area. Now that's our first position for tonight. Now our second position for tonight is going to be in the E-mini natural gas continuous contracts, but depending on what month you're trading, you can make your adjustments there. But essentially what I'm looking at here is that crude oil is going to let up a little bit. We've had a relentless move up on crude oil. Now what I'm seeing here on natural gas is basically a base off this $3.80 mark. You can see we've hit 384 today. Now our indicators, you can see that our predicted short, medium, and long-term differences are all pointing upward. Now this is very interesting. I think that what we've got here is we've got an opportunity to get back into the natural gas contracts. Now my view is natural gas is equally as valuable as what crude oil is. So the opportunity to get into a long position here based on the volatility in crude oil, very good, potentially a very good opportunity. So let's have a look at our short, medium, and long-term crossovers. We can see that our short-term crossover is getting ready to cross over to the upside. I've got multiple base sitting here. Of course our medium and long-term crossovers are not going to agree with this, but again we're looking for an early warning sign that potentially this is getting ready to turn. So what I'm also going to do here now is I'm going to look to some of my other indicators to see if I can get a different reading here. I'm going to look to my RSI, and I'm going to look to my predicted stochastic on this particular trade to see if something is going to turn in my favor, an indicator that this is getting ready to move to the upside. Well, looking at the predicted stochastic, this thing has been in heavily oversold territory for a very long time. Again, a very good indication that we should be looking at getting long on the gas contracts. Our predicted stochastic, it's in oversold, or our predicted RSI, it's in oversold territory also. But this thing here, this predicted stochastic, this tells me, and the angle of these predicted differences along with that short-term crossover, that there's some opportunity here. So with that said, let's go into our daily report here. Now on our daily report, we can see that we've actually closed a little bit higher. I'm watching this very closely. We have 387, 387.5, tiny little move up, then a 386.5, but then a 390 on the close today. So what this is telling me is this is potentially is getting ready to turn bullish. So you can see that we have 381, that's right on that support line that I've drawn, with 397. Now your day traders can look to exit at 397, but your medium term traders and your position traders, you should be looking for the 420, 430 area in the days and weeks ahead. So there's, in my opinion, there's a good opportunity. We can see that the predicted short-term difference is now turned positive. Our predicted medium and long-term differences are also coming down. We've gone from 43 to 33, 137 to 117. Again, these are indicators of a trend, potentially a trend reversal. So good opportunity here on these E-mini natural gas contracts. So we definitely want to be looking at that this week, but more directly tomorrow. So those are the market trades for February the 24th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.